What's up, guys? It's Brian from Hashware Hub. It's about 9:34 p.m. February 14, 2018, coming to you with a trading video, Bitcoin trading video. But before we get into it, hit the subscribe button, hit the notification bell. We'd be much obliged if you guys are on YouTube and you were to subscribe. And if you guys are watching us on Steemit or DTube, we would very much be very humbled for your upvote and or your resteam. So, and if you guys are not on those two platforms, Steemit or DTube, the links are down below. Definitely check that out. I had somebody ask me before, is it a referral link or anything else like that? Do we get like paid out a percent? No, no, it doesn't work as a referral link or something like that. So, we have our information up there as well as an alternative place from YouTube. So let's get right into it. Busy day. Lots going on. A lot more bullish looking type of waves from Elliott wave count. Now there's a bunch of different things up here right now in the usual fashion as the way in which I have the trades. Somebody posted something extremely funny on the Facebook group earlier today about basically it looks like a hornet's nest of lines all over the place, and I think he said like "got it?" ? Okay, it was. I thought I got a good chuckle over that. So thank you very much for that. I think it was directed towards me, maybe not. Yeah, let's get into it. So there's some volume came into the market. The volume came into the market and made the maybe if we work kind of backwards, that's probably the better way to go about this. Made this wave here finally look like a true like bullish motive wave or impulse, depends on who you want to who you're speaking to. But true Elliott technicians, it's a motive wave. So this is a great wave. It's textbook, what you want to see for a motive wave, and this is kind of how we're counting it. There's various different there's not various different ways in which you can count this. This is pretty straightforward as far as counting is concerned. And so yeah. So now this brought us up to call it about the 9,500 level, which is a key level that we've been talking about before. I'm going to delete it. I'm going to try to make things a little bit more simple here, which is a key level we thought we had spoken about before about 9,500. Now, I didn't think it was really going to make it here. I thought maybe it would be the 9,400 level and we'd have a bit of a correction. But volume came into this market in huge waves towards the later part of the day, like half a part of the day to the later part of the day. And I think really what it was just people in basically having FOMO, FOMO, F-O-M-O, if you're missing out, if you're not familiar with it, the term. And I think it's exactly what happened here. People, one guy was turning to another guy at work saying, "Hey, did you see what Bitcoin's doing?" The other guy turned to the other one, "Hey, you see what Bitcoin's doing? Oh my God, Bitcoin's up. Oh, this is up. Litecoin was up." Oh. Before you know it, they all were jumping on their freaking whatever trading applications they were, and they were putting capital to work. Now, what we're seeing right here is possibly the chance of an extended fifth. Okay, remember I had this count up here, wherever the count was. Come on. Anyway, yeah, here this count right here. Remember I had this count right here. Now it's looking like it wants to make this extended fifth, like an extended fifth. An extended fifth can really kind of go, I don't know, 97, 98, 9,800 bucks, somewhere around there. It could. I mean, with a volume that seems to be pumping in. As of these later hours, this 9,500 level is a really it's a hard level. It's nothing really to I guess make fun of. I mean, so if it were to bust through here in pretty quick succession, yeah, okay, fine. It bounced around here for quite some time. But it wasn't like a several day type thing that was going kind of sideways, hitting up against the $9,500 level. If it goes through it and kind of stays above it, then yeah, this becomes obviously support. Now, let's delete this again because we really don't need it. Now, so remember we were saying before, kind of this no trade zone, or the zone of where we're looking for the prices to jump above. Call it about this 9,100 to 9,000, right? Which was really taken from here and the top here, and this top here not only corresponds to here, but also corresponds over here as well across. So those were the levels that we were thinking, kind of like a no trade zone, or the market at least needs to get above that in a very quick succession, and it did that, and it continued to go on. So let's just delete this. Next up, so there are a few different ways to go ahead and start counting all of this, and there's a few different ways that are up here already. I'm not going to go through each one and just start boring everybody, but if there are things that are conflicting on here, yes, I know they're conflicting. Regardless, let's look at on a closer basis what we are looking at. Now, there's a few ways to count this as well. Now, one of the ways that we're looking at this is that this is a 1, 2, 3, 4, and 5. This is going to bring up 5 right here, okay? And that's just kind of this yellowish line right here. And that would make it that there would be a correction coming down, okay? Now, another way, well, not another way, but it's just kind of like an extension from that. Basically coming off of this ABC correction right here, then we can count this. This is 1, 2, 3, and then 4 and 5, right? It makes a lot of sense. That possibly could be a count right there. Okay. One of the things we noticed is that we have this as being a very strong support level. Very, very strong support level, this channel. And it doesn't look like a bearish flag. Why doesn't it look like a bearish flag? It doesn't look like a bearish flag because a lot of these are 5 wave-ish. There's a lot of 5 wave-ish. It's not a lot of 3 waves, right? It's like 5 waves up, 3 waves down. 5 waves up, I'm assuming we're going to get 3 waves down. And even if you zoom in a little bit closer, right now we're looking at the 1-hour chart. If you zoom in a little closer, on 30-minute, 15-minute, 10-minute, 5-minute, whatever it is you're looking at, you'll see that it's a lot more 5 wave-ish, even kind of these smaller impulse waves up, or smaller modal waves up. So that's what makes me to believe that this is not necessarily a bearish flag. It looks like a channel, basically a rising channel, kind of like a zigzag, right? So bullish zigzag. So what could possibly happen here? Okay, yes, we went over possibly that this thing could have an extended fifth, right? And then there's going to be some sort of correction. Or we could also have the extended fifth where it kind of comes back up, and that's like and then it peaks above this top channel, which I think it's not all that nice, but it doesn't need to be all that nice. We've had a lot of them that really weren't all that nice, and they worked out perfectly nicely. And it kind of peaks up above here, maybe goes a little higher, and then we have this extended fifth doesn't extend all that much, but it becomes like a bearish wick, and that bearish wick then kind of comes back down. And where could possibly come down to? Now this is I should have prefaced all this saying that this is our bullish scenario. Okay, one of the things about trading you need to do is, we were mentioning several times before, in the longer term we're bullish, and the shorter term we're bearish. Now when the market changes, you need a good trader. You need to be able to pivot real quick. You need to be able to lose whatever you feel that's not working and quickly move on to what you feel is working. You can't get married to things at all. That's one of the reasons why we always have like an A, B, C, D, E, F, G, H, I, J, a lot of different scenarios, which pushes you in order to go ahead and think in different dimensions. Okay, if you just have one particular dimension, well, then you're locked in that dimension. You're locked in looking at that whole market through one specific, pair of looking glasses. Okay, you don't want to do that at all. And anybody that goes ahead and says this is our scenario, the market's going up or the market's going down or whatever it is, you know, I don't know. They must be a lot better than I am. So, and I've been doing this for a really long time and have made a ton of money. So, yeah. So so what could possibly happen here as far as this thing selling off? This thing could sell off, and the obvious places that it could sell off to is kind of this support line right here. And I zoom out so you can kind of see, you know, where it's impacted before. This support line right here that we had spoken about, or it was actually resistance for some time, about 9,000. And now it works as support. And that would make it, you know, really nice because this would also be the bottom of this channel, right? We had drawn to make everybody remember again. We had drawn kind of something like this before all this had happened, right? Before all this had happened, and this is still viable. Okay, I want people to see this for a second. Okay, it's not. I delete it, but it's I don't delete it and then forget about it. Okay, this is something that is still viable. Okay, let's just change the color so people don't go blinder than they already are. Green's not a good color. Let's go blue. Okay, so look, this touched here, it touched here. Okay, there was congestion here. The market tried to break above it many times over here. Again, it was a 1 hour chart. If you zoom in, you're going to see more of it. Tried to break above it many times, right? All along here. And then finally, boom, it broke across here decisively. And this is a way, we were looking at this the whole time, okay? The whole time we're looking at this, making sure and seeing, you know, how is the market reacting, okay? And, you know, when you get volume like this come in to this candle, right? Come into this candle, and it's not a ton of volume, but it's much bigger than, you know, than most of the candles before that, okay? And we have had a bunch of other volume over here. We had a bunch, you know, come in right here again. We pretty much knew we were going to break through the next candle. And then look what happened. Look what happened. All this volume that came in on this candle, which broke above this resistance line. Okay? Delete. I have mercy on your eyes. So, so where could the market possibly correct to? The market possibly could correct, let's say, to this 9,000 level. Where don't we want it to correct much lower than? Okay, we really don't want it to get it. I mean, obviously, you know, if this is really the top of one, we don't want it to go too much lower than that. But, you know, it could. I mean, it could wick lower, you know, much lower, and we don't really have much of a problem with that. Okay, we really don't want it to go much lower than kind of this blue dashed line, which is right here as we're measuring about 8,600. People are calling this blue dashed line the neckline of this head and shoulders. They need to go back and start reading about chart patterns. This is not a head and shoulders. You know, at least from anything that I've ever seen. So, you know, there's really no volume confirmation, et cetera, whatever. It's not necessarily a neckline. This neckline happens, or could be neckline, happens to coincide with this trend line we've been drawing for eons. Okay, it's a trend line. It's not the neckline. So, wow, this thing is really, I mean, pumping through. This is volume. I mean, look at the volume that's coming up here. Look at this volume. We got 11 minutes left. Okay, and this is a 1 hour chart. So we still have about, let's say, 15% of the volume left over. So, you know, you could easily say that the volume is going to be like here somewhere. So that's one of the higher volume candles. Easily say that. So, okay, so yeah, we'd like it to stay here. We really don't want it to get much lower than here. Gets much lower than here, then we have you know, other problems. If if this channel really isn't really a channel anymore, and we have a lot of bullish sentiment that comes in, the correction, small little correction, could be something small. Okay, it could be much bigger. And as I said, there's all these various different support lines here. We also have the 9,000, and there's also the bottom of the channel here, and then we have the blue line here, this dash blue line here. If this were to, and I hadn't planned on talking about this because I didn't think the market would be becoming this bullish right at this point, but if this were to obviously close higher, and then we have a few candles up, then what happens is we need to go ahead and we need to protect this 90, let's call it 9,500, this 9,500 level. Not only do we need to protect the 9,500 level, we need to protect now the top of this channel. Okay, then this all becomes more complicated. Okay. Let's zoom out and look at things on a bigger picture basis real quick. And you can make the case that this is a 1, a 2, then we have a 3, a 4, and a 5 off into, the moon and infinity. I put that up there just because, people ask for it from time to time. So yeah, I mean, there are cases where this thing could, stop at, 12,171. The way I'm counting it right now, this would be the third leg up. The third wave, according to Elliott wave theory, the third wave is the strongest one, like 95% of the time. It's the third one. It's not even the third. Yes, it is the third one, but it's not even really the beginning of the third or halfway of the third. It's the third wave of the third wave is the most powerful. People make whole trading strategies just around that, the third wave of the third wave. Okay? It's that powerful. And, we're kind of seeing a little bit of that actually right here. I mean, we're seeing, this powerful move, coming at the end. Third wave of the third wave, simply put, is FOMO. No question. And it's all okay. The whole market is all about market sentiment. Okay. Somebody else had put a chart up on our trading team Facebook group, and he nailed it. Okay. He overlaid, I think it was Bitcoin cryptocurrency market over the tech bubble, 1990s tech bubble. I think the chart went out to like 2004 or something like that. And he nailed it. Okay. It's exactly the type of thing that we look at. It's sentiment. You could be trading anything that people want. We're humans. Okay. And there's market psychology. There's psychology behind all these things. And you could really be trading just about anything. And the charts look pretty much the same. Okay, I can put a corn chart in front of you, or I can put a Bitcoin chart in front of you, and you're not going to know the difference. You're not going to know the difference. You could put any chart in front of you and say, this is what it is, and you're going to believe it. And that's the fractal nature of the market. And the reason why the market is fractal is due to human nature, which is expressed in sentiment. It's as simple as that. Sounds simple, but it takes it's an enormous amount of time in order to learn how to trade and to measure that sentiment. Time to train in order to trade. So that's kind of like, the super bullish scenario. Where do we get into like the super bearish scenario? And I'm gonna look at a much larger chart. Where are we? Okay, much larger chart. This is an A. This is the beginning of a B. And then we have a C. Okay, and if this is the case, if this is an A, this is a B, and this is a C, This B, the B here, is in my humble opinion, is going to eclipse the top of what Bitcoin was before. It's going to eclipse. It's well going to exceed $20,000, because anybody and everybody, think about it from a sentiment or personality perspective for a second. Anybody and everybody that was not in Bitcoin before are going to get into it now, and there's gonna be more money into this than there was before. People that were buying along here and had lost some money, okay, they're looking to get retribution. Okay, they have blood in their eyes. They are looking for revenge, to get their money back. And the people that were not involved in Bitcoin before are looking to make their money. So no question in my mind that this A and then the B is going to be a super bullish motive, wave. It's just going to be ginormous. It's going to be it's going to impress people with the hyperbolic, or exponential nature of it, in my opinion. Now, the C then is going to be something that comes down, and everyone's going to think it's the end of Bitcoin. And I'm thinking that we could get to somewhere around the 4,000 levels. Okay. So that's my super bearish scenario, but it's actually bullish in the nearer term. The bearish scenario, as far as a near-term basis is concerned, is not so straightforward. Okay, it's not so straightforward. There's various different ways in which you can go ahead and you can count this. This is looking more and more motive-like. This is looking much more motive-like I've mentioned, much more bullish. So my intuition is telling me that the corrections are not going to be as deep as they were before. They're going to be more shallow and possibly not as extended as the way they were before, with the way in which I'm seeing volume. Yeah, look at the volume coming in now. I think the volume was lower here before. Now it's up here, and we have 3 minutes left. So it's not as straightforward. Okay. There is a way to count this. Where this is an A, we're gonna have a B, and then we have a C. This is in the direction, obviously, the current market. As far as a correction is concerned, there's a lot of support underneath the market. There's a lot of these different support levels. So, like I said, it becomes a lot more tricky, and it's gonna have to show its hand a little bit more before we really pick a particular pattern. So with that said, we're going to leave it there. We're going to take a look at obviously what's happened in the morning, and happy trading.